Hello traders, Gary Wagner here. It is 12:25 in Honolulu, 6:25 in New York on Wednesday, 24th day of July, 2024, and this is the evening report for gold and silver. An interesting day and range. August gold opened today at $2,410.70, quickly rose to the high of the day, $24.33, and towards the last half of the trading session would meander slowly down, closing below 2,400 at $2,397.50. Currently, gold is trading in Australia at $24.9640. Silver seems to be consolidating, but consolidating at the lower end of recent price ranges. Silver today closed down 1.5 cents, taking the most active futures contract to $29.31.5. However, it gapped below that in overseas trading. Currently, we have silver futures at $29.06. Although the dollar opened above yesterday's close, it did trade into the price range yesterday, trading to a low of 104.089 and closing down 0.09%, taking the index to 104.329. To get a real sense of how there was a definitive shift in power from bullish to bearish, we simply need to look at a short-term, half-an-hour Japanese candlestick chart. You can see that this chart labels the beginning of the day as this candle here. This would represent midnight in New York, 8 hours and 20 minutes before open outcry begins in the COMEX pits. You can see that over the first 3.5 hours, gold would trade from roughly $2,410 up to the intraday high at $24.33. What would follow for the next consecutive 7 hours is a definitive decline, a $45 price drop, and when viewed through these half-hour candlesticks, you see consecutive lower closes when compared to the open and almost consecutive lower highs as well as lower lows. A tremendous price drop, taking gold to its current bid at $2,396. When we look at a daily candlestick chart of gold futures, we can definitively see a base forming at around 2,400. As I said, current pricing is just below that, but when we look at the closes and lows as well as the opening price of yesterday, they all come in exceedingly close to $2,400 per ounce. We will get a series of reports beginning tomorrow with second quarter GDP and then Friday's PCE inflation index report. Those reports will be the last important economic information that Federal Reserve officials will have to make their monetary policy decision next week. I've converted our daily Japanese candlestick chart to a Henkin Ashi, or Japanese average chart, to make the following point. We can clearly see that the selling pressure has diminished recently after hitting 24.88 last week, but what we are not seeing is any key pivot or key reversal from bearish to bullish. So what we can say is that support seems to be forming at right around $2,400, but it is too early to determine on a technical basis that that support will hold and lead to higher prices. We'll get a much clearer picture once GDP for the second quarter is revealed tomorrow and the current level of inflation vis-a-vis the PCE report is revealed on Friday. In terms of our current outlook for silver, we still believe that we could see further downside in that we have built a base above $29.20. We have wicked below it, but prices continue to drop below the 38.2% fib retracement at this level. If we get a solid break on a closing basis below $29.20 and especially below $29, it would seem highly likely that silver could trade to as low as $28 before finding technical support. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.